The largest investors in Shiba Inu are sending conflicting signals. Just as analysts were hinting at an accumulation phase, a massive 1 billion SHIB sell-off hit the market, triggering a fresh price dip. This whale-driven volatility is tied directly to lingering Shibarium security fears and a broader macro environment of risk-off sentiment. But what am I even talking about? Well, let me explain. The future of SHIB now hinges on the durability of a critical support level. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. As of today, November 8th, 2025, Shiba Inu is trading around 990 units, reflecting a marginal recovery after being driven below a key psychological level by recent whale activity. The market capitalization is precariously holding above $5.9 billion, with overall trading volume down to approximately $290 million, indicating low retail participation and a deep market hesitation. Technical analysis shows that the token is bearish across all major timeframes, 4-hour, daily, and weekly, and the price action continues to be confined within a multi-month descending channel, suggesting persistent sell-side dominance in the absence of a major catalyst. The central event is the sudden surge in whale-driven volatility recorded in the last 48 hours. On November 6, 2025, over 1 billion SHIB tokens, worth approximately $9.2 million, were suddenly transferred from a large wallet to exchanges, a classic move that typically signals a major sell-off and profit-taking. This dump immediately drove the price below the critical psychological support of 1,000 units. This mass movement coincided with an overall stagnant phase in on-chain activity for SHIB, with the total exchange flow logging just 94 billion tokens, representing roughly $850,000 worth of activity prior to the dump. This conflicting data, low retail flow coupled with large whale sales, suggests that large players are exploiting the current low liquidity to exit positions, amplifying the downward price pressure. On-chain metrics paint a complex picture of large holder behavior. While the recent 1 billion SHIB sell-off confirmed bearish sentiment near the 1,000 unit mark, data also shows accumulation signals near the lower boundary of the current trading channel. Specifically, analysts are watching the multi-month support level at 840 units, where previous accumulation phases have historically begun. However, the total number of large transactions remains low compared to the highs seen in early October. The net exchange flow data, which tracks token transfers between whales' wallets and exchanges, is a key indicator, a flat line or halt in this flow, as is currently being observed, suggests deep market hesitation and sets the stage for either a quiet accumulation or a gradual decline as interest fades. The whale-driven sell-off is not occurring in isolation. Analysts are tying it directly to persistent macroeconomic and ecosystem risks. Firstly, the timing coincides with broader market volatility fueled by the record 36-day U.S. government shutdown, which has stalled institutional inflows and increased overall market fear. Secondly, the large-scale selling highlights a continued concern over the Shibarium security overhaul following the September 2025 bridge exploit, despite the development team's efforts to offer a final bounty to the hacker. Technical analysis emphasizes that if the current key support at 840 units fails, the downward momentum from whale selling could accelerate into a free fall toward the lower demand zone at 670 units, representing a 25% drop from the current level. The market's reaction is best described as a whale split, a clear tension between selling pressure and underlying accumulation interest. Retail traders are exhibiting caution, and the community sentiment, while still hopeful, is dampened by the realization that large wallets continue to dictate price action. Compounding this, the meme coin sector is showing capital rotation, with attention shifting to newer high-upside contenders, further diverting retail interest and trading volume away from SHIB. This meme coin rotation, coupled with the security vulnerabilities, is reinforcing a market view that SHIB's short-term upside is capped until the ecosystem provides verifiable, robust utility. The immediate market impact of the whale sales was a price dip, followed by a slight stabilization. This selling pressure has ensured that the price remains firmly trapped beneath all major exponential moving averages, EMAs, which act as overhead resistance, for example. The 200-day EMA around 1271 units. The overall market structure is a classic descending channel, with SHIB retesting its lower boundary as support. The most significant impact is the confirmation that liquidity is low, making the token highly susceptible to price manipulation by large wallets. A rebound in momentum would require a clear break and sustained holding above the 1,000-unit mark to signal to whales that the accumulation phase is complete and a reversal is in sight. The short-term outlook is bearish to neutral. The key focus is the durable holding of the 840-unit support. If whales allow this level to hold, technical structure favors a cautious optimism and a slow return towards the 1,000-unit zone. However, the prolonged consolidation and lack of buying conviction, as seen by the stalled RSI bounce from oversold territory, suggest that a breakout is unlikely soon. The immediate risk remains a further whale sell-off that could break the 840 support and accelerate the decline to 720 units. The midterm forecast hinges entirely on Shibarium's resilience and the resolution of the bridge exploit. Analysts suggest that the accumulation phase, if it is indeed happening at these lower levels, could set up a rebound targeting the 1,700 to 2,400 unit range, but this requires a significant shift in broader market sentiment. For whales to fully re-engage, two factors must align. Shibarium must demonstrate massive sustained burn volumes, and the macroeconomic risks like the US shutdown must ease to encourage institutional capital to re-enter the crypto market. Without these catalysts, mid-term gains will remain capped below the multi-month resistance at 1,200 units. The long-term success, and therefore whale accumulation, is fundamentally linked to Shiba Inu's transition from a meme coin to a utility-driven asset. Whales are looking for definitive proof that the supply will be meaningfully reduced. This requires the successful launch of the Shib Alpha layer, the Layer 3 blockchain slated for 2026, and the AI technical paper release Q1 2026. Without these tangible utility developments to offset the massive circulating supply, the influence of whale selling will continue to overwhelm the token's price action. The ability of the SHIB army to hold is the single biggest long-term bullish factor against whale manipulation. The ecosystem expansion is the direct counter-narrative to whale manipulation. The ongoing work on migrating the RPC infrastructure to enhance network resilience is a key positive technical factor. Furthermore, the implementation of a multi-choice voting system for the SHIB Doggy DAO is designed to democratize governance, theoretically diluting the price control held by a few large wallets. Ultimately, the long-term whale behavior will be driven by the quantifiable burn generated by Shibarium's utility, which must attract external developer talent and secure a perpetual high-volume burn mechanism. Whales are playing a tough game, dumping billions of tokens to test the ultimate support. The short-term market is a battleground between large profit takers and long-term accumulators near a critical price floor. The lesson is clear. Only Shibarium's utility and a massive burn rate can end the era of whale dominance. Now the charts are set, the challenge is given, and the next few years will decide everything. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.